So in the last video I posted, I asked you guys to get 100 likes in 48 hours if you wanted to see a deep dive analysis on Alibaba. Well, you guys got that in 6 hours, which means it was way too easy of a challenge, and I'll keep that in mind for our next challenge. But either way, today we're going to be talking about Alibaba stock. We're going to be going to a deep dive in Alibaba, look at its fundamentals, look at its technicals, look at some numbers behind the business, and see if this is a good stock to invest in. Let's go. So Alibaba has actually been a very popular stock on this channel. As you may know, it is a stock that I did have as number one in my portfolio. It isn't number one anymore, so if you want to see what the new number one stock is, make sure you join the VIP group, link in the description below. But getting right into it, let's take a look here at some of the company overview fundamentals and try to understand what this business does and how they make their money. So Alibaba is actually traded as BABA on the New York Stock Exchange, and they are actually one of the largest companies in China. In fact, they are actually a $400 billion company, and their focus really lies in retail, artificial intelligence, cloud, payments, and of course, e-commerce. They're actually regarded as the world's largest retailer, and they operate in over 200 countries. An interesting fact about Alibaba here is that its online sales and profits have actually surpassed all of the large US retailers, that includes Walmart, Amazon, and eBay, combined since 2015. So just imagine the size of this business. They run the world's largest and most successful shopping day, which is called Singles Day, and that had sales in 2017, for example, of $25.4 billion. That's in a single day. Now, like I mentioned, of course, Alibaba does have a massive reach in China due to the number of services that they offer to consumers. And this includes things from services like their Alipay for payments or their Alibaba Cloud for enterprise. And they're also involved in almost anything that directly involves consumers in China. They have so many different products that they offer, it's unbelievable. The biggest news surrounding this company really is that recently their co-founder and current chairman, Jack Ma, actually came out and laid out a succession plan for the company. And he did say that he was going to be retiring as chairman of the company in September 2019. He will still remain on the board of directors, but he does not want to be kind of the face of the company anymore going forward. This, of course, affected Alibaba's stock. The stock did hit its 52-week low recently, and there is a lot of negative sentiment surrounding the stock currently, but its fundamentals in terms of its core day-to-day business still look strong. We'll take a look at those numbers soon. Another thing I want to really note of here is that current CEO Daniel Zhang is actually the man behind the day-to-day operations, and he's the one who runs the company day-to-day. And he grew Alibaba, or helped grow Alibaba, from a $25 billion company to over a $500 billion company at one point. And an interesting fact is that he will actually be taking over Jack Ma's current role as the chairman of the company. So let's look at some competition here, because it's really important to understand what companies they compete against. So seeing as how they're involved in many different sectors and industries, it has competition from almost every single large Chinese company. So in some aspects they compete with Tencent, with things like Alipay versus WeChat Pay. In other aspects they compete with Baidu and again Tencent in terms of like video, for example. So video streaming, they have Youku, and Tencent has their Tencent Video, and Baidu is invested in iQIYI. So again, they're competing in that aspect as well. However, when we look at their core business, which is e-commerce, this truly dictates the future of the business in my opinion, so it's really important to understand who the competitor is in this space. And when we look at their competitor there, it's actually JD.com, which is currently the number 2 e-commerce platform in China, and it's actually known worldwide to have the best logistics systems in place. Now, I did make a deep dive on JD.com as well, so make sure to check that video out to understand the fundamentals and kind of the way that JD.com operates. Now, in my opinion, the biggest differentiator really from Alibaba and JD is their profits. And that is because JD is still not profitable, which is why a lot of investors are still flocking to Alibaba when they have to pick between these two, because a lot of investors do not like investing in non-profitable companies. JD also focuses more on their premium products, whereas Alibaba focuses more on bulk sales, on things like AliExpress.com, for example. So although theoretically they are competitors, they are approaching the market in two different ways, really. That being said though, when Chinese consumers go to shop online, Alibaba is usually the first website that they go to, or one of the Alibaba websites that they own. And if they don't find what they want on there, then they'll look into JD and on JD's website. So during the last 3 months, Alibaba has actually had 16 analysts come out as bullish on the company and 0 analysts come out as neutral or bearish on the company. The average price target that these analysts have given the company is $237.56, which is roughly 52% upside from its current price. So this kind of insight right here, which I did get from tipranks.com, is really useful because it kind of gives you an idea of what the overall sentiment is of the stock and of the company. Now, if you want to check out and want to sign up for TipRanks for free, I'll leave a link down in the description below. You can go check out. I'll leave a link directly to Alibaba, or you can take a look at any stock that you really want to look more into and see what analysts have to say about the company. So now let's look at the technicals here, and I love looking at technicals because it gives me a better idea of the overall picture of where the stock is moving, at least for the short term. So when looking at Alibaba's chart, I see a lot of technical issues here really. As I've outlined in my VIP group, if you haven't joined already, make sure to join. Alibaba has actually recently fallen through some major support around $170 per share, and it's now kind of in a channel between $130 and $170. So I suspect as this trade war tension continues, the price will continue to move lower, and we may potentially trend down to around $125 or so, test that lower level support, fill that gap, and then potentially look to move higher. Now, another bearish sign for the stock is that it's under all of its moving averages, and this is typically very difficult for a stock to break past unless there's a lot of good news or a lot of good catalysts that come out. And recently, even with strong earnings, which we'll get into in a second, you can see that the stock moved much lower. Now, what am I personally doing with Alibaba? Well, I'll let you know that it's not my #1 stock anymore, but if you do want to know where it sits in my portfolio now and if I sold off shares or just added more shares of other companies, I outline all that and more in my VIP group, link in the description. So now let's look at some fundamentals here. So Alibaba has a PE of 48.17. Their biggest competitor, for comparison's sake in China, JD, does not even have a current PE because they're not a profitable company. So if you're looking just from this regards, comparing the two, Alibaba is of course the better value. Now, they currently do not pay out a dividend because they are a growth company, and as a result, most of their money goes back into the business to grow the business and to also make acquisitions in the business. Now, I don't expect Alibaba to pay out a dividend anytime soon because, like I said, this is a growth stock. Their money goes into the business, and they rather do that and give investors returns that way as opposed to pay out a dividend and potentially affect the growth of the business. Now, their balance sheet here shows that their cash and investments actually sit at around $56.5 billion. Their debt is just under $36 billion. So they have a cash debt ratio of around 1.586. So in my opinion, this is a pretty healthy balance sheet, around 60% more cash than debt, and it's a good sign for a company that's actually this large and focuses constantly on spending, making acquisitions, growing. You know, they're in retail a lot, so they have to spend a lot on retail as well. So it's good to see a lot of cash on hand because these things are not cheap and they will eat into the company's cash. Now, the numbers and growth year over year is where the real picture for Alibaba really comes into play. Now, everyone knows Alibaba is a growth company, but you don't realize how much of a growth company it is until you look at their numbers here. So as we can see, Alibaba looks very strong across the board, especially in the last few years, with their revenue, their operating income, and their net income. Now, although the net income did take a hit 2 years ago, it did recover last year, and we are back to pretty high double-digit growth. Now, if you look at the sheer size of this company, it's absolutely insane that they're still growing at double digits, but it just goes to show you how large the Chinese market is and how untapped a lot of the country still is. So there's still a lot more potential for this company. One thing that does worry me though is that capital spending is increasing substantially. They almost increased by double last year. So that's something that they really need to keep in check. I do understand that they are kind of in retail as well, so that adds up to the cost. But they do have to keep that in check because if it isn't profitable or isn't as profitable to do that, they should focus on trimming that down. Now, their stock performance has actually suffered a lot in the last few months, like we just looked at. And as a result, this is one of the lower prices you've seen in this stock in the last couple of years. So we did hit a high of $210 or so per share at some point this year. And now we're currently under $160 at the time of recording this video. So a lot of trade war tension, a lot of tariff tension, it's really pushing down the stock. fundamentals still look very strong on a business perspective. However, you have to look at the macroeconomics because that's what's driving these Chinese stocks right now. What I'd say is that right now, just looking at the pure numbers, this is a bargain. The PE is a bit high, but it is expected to drop next year with the forward PE, and it will become an even better value. Now, I know a lot of investors are starting to flock into this stock, especially those who have been sitting on the sidelines for a while. Jeremy from Financial Education actually started picking up the stock recently, and he says he wants to keep adding to this stock over the next few months, weeks, whatever it may be. So a lot of people are seeing value in Alibaba now. I've been in the stock for quite a while. In fact, I got in at around $120 or so. So I've made some pretty decent returns on this stock, especially when we hit those highs. And overall, this has been a very successful stock for me, but based on the macroeconomics, I don't know how long this will take to recover unless we see something like a deal reached between the US and China, and that would help propel these stocks back higher. Now, looking at the charts here for the year-over-year performance, you can see kind of a visual of how fast their revenue is growing. It's going pretty much exponentially at this point. You can see even their net income and the operating income is increasing substantially. And like I mentioned, the capital spending is also increasing. That's something you need to keep a note of. But as you can see, even with all these numbers going to the upside, increasing, you can see the stock price is still suffering and going the opposite way. This typically means that there is value in the stock, there is fear around the stock, and usually when there's fear, that's when you get a lot of opportunity in the stock market. So let's kind of conclude this here and let's figure out if Alibaba is a buy or not. So it's a strong company and it's truly a powerhouse in my opinion when it comes to any sort of consumer service, especially in China. Now, they have not expanded much across the world yet. They are planning to expand in India, but when they really do push their efforts, something like North America, Australia, Europe, there's a lot more potential for this company. Now, although their focus isn't currently on growing profits, they are expected to be extremely profitable in the future, and they continue to put their money into more growth vectors of their business, which drives more profitability like Alibaba Cloud. The recent trade war and tariffs, like we talked about, have severely impacted the stock. And although the business is running really at full steam ahead and everything looks bullish from a fundamental standpoint, the macroeconomics are still pushing down the overall Chinese market and Alibaba specifically. The recent announcement of Jack Ma retiring in 2019 did affect the stock price. It is a fundamental change in the business because this is the man who co-founded the company, this is the man who is the face of the company, and he won't be starting September next year. So that's something to keep in mind if you do want to invest in this company. Can Alibaba survive without Jack Ma? I did make a video kind of talking about that, so make sure to check that out as well. But just to summarize my opinion, I think they will. He's gotten it to the point where they can kind of just keep going with the momentum here. And consumers have really strongly believed in this company over the last few years. It's one of the largest companies, like we said, in China. And people continue to shop online and choose Alibaba as the platform to do so. So yes, it does hurt the face of the business that he's leaving. But from a day-to-day perspective, I think that their business will still continue to grow. So overall, what do I think about Alibaba? Is it a buy? Well, it's proven that despite the macroeconomics, they continue to thrive from a fundamental level. Their earnings that they just posted were absolutely phenomenal, and I don't see this slowing down anytime soon. So for these reasons, and of course the exposure that this stock gives you to the Chinese market, which is expected to grow at a pretty fast rate compared to the US over the next few years, I would personally consider Alibaba stock a buy at current prices if you plan to hold this for the long term. Again, if this is a short-term hold for you, it might be wise to wait it out, see when we bottom out, and then potentially go in. No matter how good the business is doing, the macroeconomics is pushing it lower, so you'd want to wait and see where it settles before it starts moving higher. So I appreciate you guys getting 100 likes in the last video. Let's see if we can get this video to something like 150 likes. That would be absolutely amazing. I love making these deep dive videos for you guys. I know you guys enjoy watching these videos, so let me know in the comment section down below what stock you want me to cover next in a deep dive video. I will take the #1 most upvoted comment and I will make a deep dive video on that. So thanks for watching, guys. Hope you enjoyed this video. Don't forget to invest positively, and I'll see you in the